Welcome. This is our strategic analysis from HDIN Research, and today we're diving deep into a really fascinating company, TK Corp. Now, this is a company that truly forms the backbone of global industry, but chances are you've probably never even heard of them. We're here to unpack their incredibly high-stakes bet to stay on top in a high-tech world.
Okay, so here's our game plan for today. First, we'll get to know this unseen industrial titan. Then, we'll really examine the core engine that gives it so much power. After that, we'll analyze its strategic pivot into high-tech, take a look at its financial fortress, which is really something, and finally, we'll chart the road ahead. All right, let's get right to it. Who exactly is TK Corp? Well, think of them as a dominant but kind of hidden player. They make the absolutely critical components. We're talking heavy-duty industrial pipe fittings that go into everything from massive petrochemical plants to the world's biggest ships. And, this really brings us to the central question, doesn't it? In an age of constant technological upheaval, how does a company rooted in traditional heavy industry do more than just survive? How does it actually plan to grow and lead? Well, that's the story we're here to tell. The story of TK Corp's high-tech Gambit. To really understand where they're going, you first have to grasp where all their power comes from. And it all starts with the absolute, unrivaled dominance of their core business in plant equipment. Just take a look at this chart. It tells you pretty much everything you need to know. In the third quarter of 2025, almost 90% of their revenue came from that one division. This isn't just their main business. It's the solid bedrock of the entire company. It is a massive, cash-generating engine. And their reach isn't just local, it's global. This number right here is pretty staggering. Over 58% of the entire overseas export market in 2024. That means TK Corp is a world leader in its very specialized niche. And it's a niche with incredibly high barriers to entry. You can't just wake up one day and decide to compete with them. So who are their customers? Well, it's basically a roll call of the world's industrial giants. Aramco, BP, Total, Hanwha, Samsung, Hyundai. I mean, when your client list looks like this, it just speaks volumes about your quality. Getting approval from a company like Aramco is a monumental task that creates a huge competitive moat around your business. So you have this incredibly stable, profitable core business. What do? For TK Corp, the answer was to use that stability to fund a massive strategic leap into the high-growth industries of the future. And as you can see from this timeline, this was no sudden impulse. This strategy unfolded over several years. In 2018, they diversified a bit into premium real estate. But the real game changer, that came in 2021 with the acquisition of HYTC. That single move plunged them right into the heart of the secondary battery supply chain. This really illustrates their whole strategy perfectly. On the one hand, you've got the core cash cow. That's the stable, traditional business. On the other, you have the growth engine, their big bet on battery materials for the booming EV and energy storage markets. It's a classic strategy. You use the profits from today to build the profits of tomorrow. Let's get a little more specific about this HYTC acquisition because it's so critical. They don't just make some random part for batteries. They produce the essential, high-precision components and modules that you absolutely need to manufacture lithium-ion batteries. This puts them at a vital choke point in the supply chain for electric vehicles and large-scale energy storage. And their global expansion strategy for this new business is just brilliant in its simplicity. They call it the follow-the-client strategy. Basically, wherever their major customers like Samsung SDI or LG Energy Solution go to build a massive new battery factory, HYTC builds its own facility right next door. This ensures perfect integration and makes them an absolutely indispensable partner. Of course, none of this ambitious expansion, none of these big moves would be possible if they didn't have an exceptionally strong balance sheet. TK Corp isn't just profitable, folks. It's a financial fortress. This quote from our own internal analysis really captures their whole approach perfectly. They are financially extremely defensive, which allows them to be operationally steadily offensive. In other words, they keep their finances incredibly safe, which gives them the freedom and the power to make bold, aggressive moves in the market, like buying HYTC. So what does financially defensive actually look like in practice? It looks like this, an asset-to-liability ratio of just over 10%. That is a remarkably low number. It means they have almost no debt. Think about the operational freedom that gives them. It's immense. Their liquidity is just as impressive, if not more so. A current ratio of 8.4.
That means they have over $8 of short-term assets for every $1 of short-term liabilities. To put it plainly, this company is absolutely swimming in cash, ready to deploy it on the next big opportunity. And at the end of the day, their profitability is exceptionally robust. A net profit margin of nearly 25% is just fantastic. It's driven by the high-value nature of that core business, and, as our analysis shows, it's also helped along by some savvy financial investments, which further strengthens their cash position. So, with a core business that's a monster, a promising new growth engine, and a rock-solid balance sheet, what does the road ahead actually look like for TK Corp? Is it all clear skies? This analysis really crystallizes their position. The strengths are obvious: market dominance, high technical barriers, and almost no debt. The opportunities are massive, tied directly to the global energy transition and the EV revolution. But their revenue is still heavily concentrated in that one core business. That's a weakness. And like any global industrial player, they're exposed to things like volatile oil prices and geopolitical risk. And this really brings us to our final thought. TK Corp is running a very ambitious playbook, using its old world industrial muscle to try and conquer new world tech sectors. So the big question is, will this serve as a blueprint for how other legacy industries can evolve in the 21st century? Or is there a real risk that in chasing these two very different paths, this industrial giant could be spreading itself just a little too thin? The answer to that question is going to define their future.